Hey, this is Mike Swanson, Wall Street. I want to talk to you today about an article I read a few hours ago, and it's been bothering me ever since. The title, Rich Young Americans Have Lost Confidence in the Stock Market and are betting on these three assets instead for long-term tailwinds. Now, I understand why people are worried about the stock market because it fell so much in 2022. We had an awful bear market year, and I understand the need to diversify and not just own stocks. I don't just own stocks. In fact, in some ways, there are investments that are more stable than the stock market that may be better. But when you read the details of this article, it's one of these things that these people are putting too much of their money in that has me really worried about their financial future. Now, it says they surveyed people under the age of 42 with at least $3 million, the wealthy millennials. And they found they only have 25% of their portfolio in stocks. Wealthier people older than that have 55%. So they don't believe in stocks as much as the older generation. But the thing about stocks is that's a broad category. There's more to stocks than Amazon. There's more to stocks than Google. There's more to stocks than Meta. There's stocks that are stable. There's stocks that pay good dividends. So not all stocks are as risky as other stocks. That may be something that they don't really quite grasp. Meme stocks are not good investments, but you can buy REITs that pay big dividends. You can buy all kinds of stuff. Now, so what assets do they prefer over stocks? Real estate, which I think is a good long-term investment. Now, you got to know that interest rate movements up and down impact the price of real estate, and real estate can dip. We saw real estate prices, in fact, go into a tailspin between 2007 and 2009. Now, I don't think that's going to happen, but we have seen a softness in real estate prices. Perhaps that's a good entry point. But as I mentioned, inside the stock market, you can buy real estate investment trusts. These are stocks that of companies that invest in real estate and have to give back a high percentage of the revenue to their investors as dividends. And if you do the historical studies, you'll find that these real estate investment trusts are closely correlated to the changes in real estate values across the country. I own these currently as a way to invest in real estate myself. Now, this is where things get scary. Cryptocurrency. So here's the deal. The thing about this is that 29% of younger people said that crypto offers them great opportunities, and they're putting 15% of their portfolio into it. Now, crypto is a disaster. The other thing they're investing in is private equities. These are private companies. That's a kind of sophisticated type of investing. But let's just talk about crypto. So they were told that crypto would go up when the stock market fell. And crypto turned out to crash when the stock market had a bear market, fall more than the stock market when the stock market fell. They're investing in this with 15% of their money as if it is an alternative to stocks when it is not. It's just simply more risky than stocks. And let me prove this to you. This is not just an opinion, this is reality. So, this is a chart of the price of Bitcoin. And yes, Bitcoin went up a lot in 2020, but everything went up a lot in 2020. And then when Bitcoin peaked, it went into a tailspin. The thing about that is that we were told that Bitcoin was somehow a safe haven that would go up when the stock market fell, would go up when there was inflation, would go up when the dollar would fall. It did the complete opposite. The nature of Bitcoin is not what we were told it was. We were also told 5 years ago, 6 years ago, 7 years ago that Bitcoin would replace money, that Bitcoin would become money itself. And to do that, the definition of money is something that acts as a exchange, a medium of exchange, and as a medium of safety, a place to a store of value. And it's neither, because it's too volatile to be a store of value, and it has not replaced the currency because it has transaction costs. It's not that easy to use it. So it's not replaced money. We were told it would. It hasn't. It has not been a safe haven that would go when the market fell. It did the opposite. What we were told about it is essentially lies told from us by social media videos, these so-called influencers, and crypto gurus. All of them turn out to be false prophets. FTX demonstrated that, and so many people got caught in this and lost. They believed the nonsense and the misinformation, which the internet tends to be a platform of, because it gives what it promotes in the algorithms is what the most number of people want to see, and that is hype, especially when it comes to crypto. So warnings about crypto were suppressed by the algorithms. A video like mine will get, me saying this will get less views than videos where I'm bullish about the stock market or bullish about gold. It'll get less views because not many people want to hear the truth about crypto. People want to hear about crypto, want to hear the lies, but they're being destroyed by those lies. And that's demonstrated by what's on the bottom of this chart. This is a ratio dividing the price of Bitcoin by the S&P 500. It's been declining now for over a year. What this means is Bitcoin has been performing worse than the stock market, than the S&P 500. When the S&P 500 has mere pullbacks, crypto crashes. And then when the S&P 500 rallies, it doesn't rally enough to make up for the mega losses that it's caused people to suffer. Therefore, having 15% of one's portfolio allocated in Bitcoin is a way to fall behind the markets. That people doing that would be much better off putting that in REITs or something even more stable, less volatile, as the safe haven portion of their portfolio, and then do a rebalancing strategy with the rest of it. What crypto essentially acts as is a call option on the stock market, on the NASDAQ in particular. And that's demonstrated by the indicator on the bottom of this chart, a correlation indicator comparing the price of Bitcoin with the NASDAQ. And when this is near 1, it means that the two are trading lock, stock, and barrel. When it's -1, they trade opposite. Well, as you can see, this is basically near 1 almost all the time. Bitcoin simply trades with the NASDAQ, but is more volatile than the NASDAQ. It crashes when the NASDAQ simply pulls back. It acts as a call option on the NASDAQ in effect. And I would assert that one would just be as well off to buy calls than to buy Bitcoin. But few people would want to put 15% of their money in crypto. So in essence, what I've just explained to you is that, Bitcoin, crypto should not be 15% of anyone's portfolio, because it is essentially a speculative gambling type instrument. And you don't want to have 15% of your money in a single call option, much less, a crypto coin acting like a call option in its very nature. That's not what you want to be doing. To have a stable portfolio that's growing, your goal in a portfolio should be to try to beat the performance of the S&P 500. If you want to beat the market, you become a winner. And if you want to beat the market, then you have to think in terms of, what do I need to do to beat the market in a sustainable way? Not in a flash in the pan, wild speculative gamble that has a chance of leaving you bust, which is what crypto does. 15% of someone's investments in crypto is toxic, dangerous, and leads one to financial disaster that becomes hard to recover from. Again, crypto is not a safe haven. Let me show you, what a safe haven is. A safe haven is not a virtual asset that you can only stare at on your telephone and has no connection of anything that it owns in the real world. For example, if you buy stock, yes, that is something that you look at on your phone, but that stock owns a share of a company that exists in the real world that you could go and find if you drive to. It could even be up the road. If you own shares of Walmart, very likely there's a Walmart just miles from you, or a McDonald's. You could drive to these places. They exist. The share ownership represents an ownership in something in the real world. Virtual currencies own nothing in the real world, absolutely nothing. That's why they're so speculative and so toxic, because you own nothing. Basically, it's just a gambling instrument based on, yeah, it can go up if you could talk other people into buying it, like a pyramid. It does not function as a, they talked as if it was precious metals, a safe haven, but it's not. If you want something that acts as precious metals, then buy precious metals. Buy something like this. This is 10 ounces of physical silver. This is real. It's in my hands. It's not something I can simply look at on the phone. This is the very definition of stability. It's not going to go away. It's right here. It's not going to go up and down in volume, 20%, go to zero. It's not on some crap, crazy exchange that can, be a scam and take my money out of it, or they put the money in that I gave them in pyramid and other things and do FTX. No, the whole crypto world is nothing but a group of vultures. Stay away from it. Get out. Liquidate. If you own crypto holdings, liquidate. If you have friends that own crypto and you don't, tell them get out. If you have children or grandchildren in crypto, tell them to get out of it. Get away. Get involved in more stable assets that go up that have a higher risk to reward ratio when you divide the two together. That's what sustainable investing is all about: building real wealth, not throwing your money as if you're just gambling in a slot machine. So I hope this message helps. And if you know people that need to hear it, send it to them. Like this video, so I know you like it. If you don't like it, hit dislike, and I'll see that too. But you want to get my next video update, hit the subscribe button, hit the bell next to it. YouTube will send you an alert as soon as that next video is up. And I'll be talking with you later.